exit poll results later this evening, and of course results later this week on Thursday. Gautam, morning again. Sorry, go on. What's price action? Just pure price action telling us. More to go from here?
Yeah, here's the thing. The way I see it is if you look at the month of November, and if you look at MSCI Asia ex-Japan, it saw a 17% rally. It's the second highest in the history that you've seen a single month rally of as much as 17%. Of course, a lot of that was propelled by $8.5 billion of foreign buying into China. And I think that's what I find as a bit of a concern for our market, given the fact that money invariably ends up flowing from higher valuations to valuations which are more attractive. We are still 100%, 130% at a 130% premium to MSCI China. So I think that risk clearly remains for the Indian market. From a foreign institutional buying perspective, domestic is a separate story. So I think you saw that rally in the month of November, and I think the rally will continue given how compelling valuations are. And I think we've seen a lot of empirical evidence out there that over the last 30 years, you really haven't made much money in China. But having said that, if you look at the number of times foreigners or even locals for that matter in China, in the rest of Asia, have made money from the trough to the peak, I think that is really what needs to be kept in mind, and valuations are very compelling at this point. In fact, Korea, if you look for as another example, foreign ownership is at a 15-year low. So clearly a very compelling case from foreign institutional investors to look at other markets in Asia, not just India. So that's something to keep in mind.
Gautam, I thought 6-year-olds were buying stocks in Korea. Do you remember during that frenzy in 2020, 2021? Remember those stories? I mean, a 7-year-old makes $1 million.
Yeah.
But that's interesting.
Yeah, that's but point. Prashant,
sorry, yeah, go on.
Yeah, but what I guess the other thing which clearly is also in some sort of a frenzy year, I mean, more than half the investors now in the Indian market, given the proliferation of demat accounts, have gone up 3x in the last 2.5 years. More than half of the investors now are new. So in some sense, there might be a 7-year lurking who's playing the market. But seriously, it's gotten to a point where I was at a funeral and I was approached by 2 people separately asking me my view on the market. And I said, can we focus on why we are here, and let's not talk about the market and give respect to the person who's deceased.
Oh dear.
So I think there's a bit of a frenzy here too.
Unfortunately, it's only not my 7-year-old.
Making all the money.
Some 7-year-old.
Some 7-year-old in Korea making so much money. You're wishing it would be yours, right? Okay. Someday that'll happen. But Gautam, hi, good morning. What about back home? I mean, I think that the entire rally started on the 24th of November when the US Fed came out and said that they're going slow on rate hikes and they're, fight against inflation, they're taming inflation and all of that. But do you think a lot of it now is in the price, or is there more to go? And if yes, what are the big themes that you're looking at in the Indian markets now?
Sure. So, here's the way to look at the Indian market. If I look at the absolute amount year to date invested in the Indian market, so FIs are a negative $17 billion. Domestic mutual funds are a positive $33 billion. And if I look at the NSE data that comes out on retail participation in the market, we're roughly about 8 or 8.5 billion of retail year to date net. These are all net numbers. So if you add that up, you get about $22 billion of net flows into the Indian equity markets, counting everybody who's participating in it. Now, if you think about it, for a country which has a market cap of $3.3 trillion, all it takes is $22 billion, which is, not even, I guess, mathematically, not even 0.5%, to actually keep the market up in local currency terms as much as 6%. Now, think about it. If another $5 billion inflows or outflows were to come into this market, again, keeping in mind that our total market cap is as big as 3.3 trillion, 4th largest in the world, another $5 billion inflows or outflows could have a significant market impact. So I think that's really what is going on. While foreigners may have come back marginally, I see more of that money going into North Asia. And as far as domestics are concerned, I was looking at the Angel One numbers which came out, and I follow them every month. They put out these statistics. They are clearly seeing a month-on-month and a year-on-year slowdown in volumes. So, I think as rates continue to rise, and we'll see another rate hike potentially this week from the RBI, as rates continue to rise, I'm getting increasingly asked questions about what's a good fixed income product to put money into. So I think some of that at the margin, I'm not saying everybody's going to do that, at the margin will start to happen, which could to some extent slow down the domestic flows.
Hi Gautam, morning. When we chatted last, Gautam, you were sounding a little bit skittish that maybe the lows of this year, they could be revisited at some point of time. 2023 could be a challenging year actually, because earnings could get pulled back a little bit, and valuation-wise, we're not cheap as we've been discussing. What's your view now? Those lows that we saw in the middle of 2022, they'll hold up, that 15,000, 15,500 odd, and we will not revisit those levels?
Yeah, that's a good question. And the fact is, I still stand by the fact that we are in the middle of a bear market rally. We're not out of the woods. The other thing, of course, is if you look at the Bloomberg consensus for world GDP growth, it's down from, this year, estimates are 2.9%, and next year, 2023 calendar, are anywhere from 1.8 to 2%. So clearly a slowdown. The question really is, how deep does the recession in the US and Europe get to? And nobody has an answer to that. Now, if you look at the MSCI All-Country World Index, the United States accounts for 61% in terms of weightage. So that will drag down the rest of the world if a recession were to get deep. I hope it doesn't happen, and I hope it's a shallow one. And of course, to some extent, we get insulated if it's a shallow one. But the reality is that I do see the market trading sideways, maybe even going down by about 7 to 8% if the US recession were to get real.
I do want to ask you your views on certain sectors. So, for example, the auto sector, right? I mean, in the month of
Please.
November, the numbers have looked very good, whether it's names like M&M or even something like an Ashok Leyland, which has seen an over 50% growth in the medium and heavy commercial vehicle segment. Do you think this is a space where there is still more headroom, both from a valuation as well as a growth perspective for investors?
I think there is. The one thing that I must caution all investors is the fact that heading into 2023, which is going to be a very uncertain year, I think valuation protection is really your friend in this market. So as a result of that, I would say that if you look at the two-wheelers, for example, the Bajaj Auto and Hero, they're both around 15 times FY24 PE. Downside's fairly limited. Even Maruti is not that bad actually, 24, 25 times. And Ashok Leyland's at about 19 times. So I think these valuation numbers aren't really aggressive for the automobile sector. Might be a good place to stay invested. Having said that, I think the passenger car segment, and unfortunately Maruti is really the only way to play it, is very robust in terms of demand, especially the premium and luxury segment.
Yeah, no, that segment is doing very well. Just a few specific movers. Go Colors, if you can put this up. That is down 3.5% on volumes, mind you, very large volumes. Oh, sorry. Okay, fair enough. That's so 1152 on Go Colors, and the other one, of course, is Rainbow, as we discussed earlier. Zomato is down 2%, 67 on Zomato, and Persistent, we highlighted that. As part of the standout report, which is down 2% or so. Angel One, Sonia was talking about, that is down about 3.5% as well. On the upside, it is Policy Bazaar, which once again is up some 3%. Any thoughts, Gautam? Policy Bazaar, actually specifically Policy Bazaar, Delivery, and Zomato, if you like anything here.
I would stay away from these names for the time being, because I think there's more selling pressure that's still coming into these stocks. So they may have had a bit of a rebound, and I wish them well. But the reality is, if I can buy a Facebook or Meta at 15 times 23 earnings, that company's got an operating cash flow of $45 billion. Now, Indians have the ability to buy shares in the US, so you can open an account with any of these discount brokerages and do that. I'd rather put my money there than actually put money into any of these who are still far away from even breaking even on EBITDA.
Okay, all right. We'll leave it at that, Gautam. Thanks a lot for joining in, and have a great day, a good week ahead as well. If we don't speak